ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
Brandon.
Oh boy. Oh boy. Oh boy.
Okay, let me turn the noise down just a bit.
All right.
Okay. Would you
Rather. Oh, this is a would you rather game. Okay, go.
What would someone have to offer you for your house for a month and a half?
Oh, dude,
A
I don't
month-
know.
a month and
That's
a
a long
half.
time. Although we've done the Airbnb thing, so it's like, oh my gosh, my house. Is it in the summer or the winter? That's a very big difference for us.
From July to it's basically the entire summer. July to August 15th. July
For
1st.
us, it's completely different. So the summers, that's when we want to be in our house. The winter, we would give it to you for $5. We're like, yeah,
Okay,
we're gone. Just kidding.
So what would it be? 6 weeks from July 1st
in the summer
to August 15th.
I don't know, like 30 grand.
30 grand you would walk away from your house for a month and a half?
Yeah.
Huh.
We don't have baller houses like you do, man.
So remember when I told you because of all these fires, things were going to get really crazy in LA?
Yes.
The numbers they're throwing around now, it's 50,000 a week.
Oh my gosh, Nick.
They offered me 300 racks for 6 weeks.
And you're taking that, right?
Well, I'm going to see if they'll pay in Bitcoin.
Oh, okay. I like that.
The problem is I have to go then rent a place for
It's not a problem, Nick. Not a problem at all.
For the cat.
300. No. Oh, yeah. I see what you're saying. 300 racks. That's 300 racks.
I know. Worth thinking about. Anyway, we meaning Zach ZBT, whatever. He uncovered the whale, Brandon. The whale.
Cool.
Do you want to remind people what was going on with the whale and why this is kind of cool?
Well, the whale, he traded a lot more than even when we got onto him, but the whale was just as soon as we started kind of watching him, he had that, what was that, a $500 million short on Bitcoin a couple days ago. But like 500 million sounds big. His position was like 17 million he could lose.
Yeah.
And he was it was high leverage. I mean, to trade 40x leverage, if it goes the wrong way, like a few $1,000, you're white.
You're done.
So, inside information, maybe. The fact that he was able, like, you don't trade 40x leverage with 17 million with, oh, well, unless you're crazy. So this dude could have been crazy.
Unless it's stolen money.
Oh, that's true too. Free money.
Which plays into this story, doesn't it?
It sure does. Have you? Okay, so I guess we might as well go over this really quickly because I think this is kind of cool. I'm going to share my screen because we're just going to walk through the little thread. So if you don't know Zach XBT, he does a lot of blockchain research. He's been helping Bybit with the hack. He knows what he's doing. Like I don't even know how he does what he does, but he figures it out. Okay. So he's been doing an investigation into the hyperliquid whale, and for the leverage that he profited. So it turns out he started like researching this guy He opened multiple highly leveraged positions on Hyperliquid and GMX from January to March 2025. And every single one of them he's done really well on. So I don't even know. I mean, regardless if it's stolen money or not, he's done pretty well with the stolen money. So he's timed it almost perfectly. Even after the FOMC meeting, I was watching the wallet. As soon as the FOMC meeting hit, it went to like, it peaked up for the first like 8 seconds. He shorted. It went down. He sold, and then he longed, and then it went right back up. He almost hit it to the dots, and I don't know how. Anyway, that's besides me. Anyway, so they gained a lot of attention this month on those two chains because they posted those on Hyperliquid. Everything's public. The large Bitcoin short position on 40x leverage, he made $9 million or whatever, $10 million. He made a lot of money. The last one he made $9 million. The very first ones he made $10 million. So he made a lot of money. So Zach goes through and he identified the counterparties. He checked all the wallets where all the money was coming from. The cluster was tied to Rubit, Binance, Gamdom, ChangeNow, Shuffle, AlphaBo, BC Game, and Meta Win. I've never heard of any of those except for Binance. That's crazy to me.
Shady AF.
They all sound shady AF. The thing that was the real ticker here, and I think the thing that got him to go way back is this. One of the wallets signed a message that linked to the X account at Quatio, and they stated they made, so on the X account they stated, I made 20 million bucks on GMX and Hyperliquid. So he went in, he signed this message here. It says, I am, it's too small to read for you guys, but he says, I am that guy. Oh, maybe I can zoom in. Oh, there it is. He signed this. So if you sign this on the blockchain, you have to do a digital signature, and it links to that Twitter account. Anyway, so then Zach, he goes over to the Twitter and he like reaches out to him. He's like, hey, is this you, by the way? And he's like, nah, dude, you're crazy. Anyway, so he messaged, he said, I'm going to share this info just on X, just so you know. He's like, hey, with respect, you've done a lot for the community, but your logic's flawed, which I don't think Zach's logic's ever really flawed. He's a pretty bright guy. And he mentioned even earlier in this chain that he never shares data without knowing 100%. So the fact that he's sharing this is pretty legitimate. Anyway, he finds out that this guy is this guy. So he reached out about the phishing sites that were used too, and another address that was linked to him. And another address that made another, that received 17.1K in January 2025 from another phishing drain. And then he goes further and he tracks this source all the way to, where's that piece here? It was provided, blah, blah, blah. Oh, he tracked it to a Telegram account. So then he goes to this Telegram account, finds out the Telegram account's deleted, but finds some old messages from the Telegram account, which is kind of crazy. And he goes through and checks those messages out, tracked it down some more, and then he finally reveals the public record of this guy's account is William Parker. Okay. So then he says, who's William Parker? Big Willie. This is Willie. Sussex computer hacker jailed for online fraud scam. And I think he's a 21-year-old. And a lot of his online fraud scam was linked to casinos. He apparently from this casino stole about $903,000. He was able to get $1 million basically out of this casino online. And then he used basically an exploit in the casino to directly fund the crypto endeavors. So everything, dude, I don't know how Zach does. There's no way you could do this stuff. This is why, like, if you think you're going to hide something from somebody on the chain, dude, Zach, if Zach can figure this out from a online casino exploit, that's how he funneled the funds into. So typically you or I would take our funds from our KYC bank on-ramp. We go to Coinbase or whatever, and then we go from Coinbase to MetaMask or whatever it is, and you can track that easily, right? This guy was on a casino as an anon, stole some funds. Through those stolen funds, was able to fish some of those funds out through an exploit onto the blockchain and use that exploited cash to start making all this money and all these trades. And Zach found it, which is crazy. So this is the guy that's here's your dude. This is your whale. This is who you're trading against. You always think of like maybe this like guy in a business suit. He's like, I've got $1 billion, but like this is impressive. This screams Hayden all over again to me. Yeah. Like same feel of people.
And I don't know, did you keep going up? Because he's been involved in a bunch of scams, not just that one.
What? Okay, what other scams was he involved in? I don't know if I read much more than
I
that.
had looked. I just saw some messages last night where like this isn't the only scam this guy's involved in. There's like a bunch of these little sketchy shit that this dude does, and so he just sends it all to crypto, and of course he punts it and goes 40x long and 30x and 70x because what difference does it make? It's free money.
Yeah, I mean, didn't earn it, so
Well,
easy,
and that explains
easy go.
that explains some of the stupidity in his trades because he makes irrational trades. I was kind of hoping this was something more interesting than this. I was hoping it was going to be some cool thing, some exchange trying to expose Hyperliquid for being stupid. This is just a thief who YOLOs into every trade. That's it. There's nothing here. And when the trades look illogical, it's because he's too fucking stupid to know what a good trade is. He's just spamming money around. And you know what? If you have a lot of stolen money, you can do a lot. So good on him until they lock him up again. I'm pretty sure this violates whatever his probation was when he was jailed for hacking and fraud. I feel like.
I would tend to agree.
And so now that they know, I wonder if prosecutors are like, that little son of a bitch. Oh, punchy face son of a bitch. What do we think is going to happen with the that guy, that douchebag, because it's tied to Melania.
Well, that's what's interesting is this guy is long Melania right now, right?
Which doesn't make any goddamn sense.
Melania is like the foundation for all scams. It was the start of the downtrend here. It's what sucked everything out of the market.
You know what? It makes sense that maybe this guy is connected to Hayden.
Oh, they chat.
It makes a lot of sense because when Hayden goes and when he used to, remember he tried to launch a coin last week, I guess, and it flopped.
The Wolf coin?
Huh? Yeah.
The Wolf coin? He made a lot of money on it. Yeah, it flopped, but he made money.
Well, yeah, he made money because he rugged it, but everybody else lost money.
Yeah.
But like at this point, is he just thinking I'm going to live my life forever on the run? I mean, that's not going to work.
Right.
When every government now is like, because once you issue a red notice on Interpol, everyone in every extradition country or anybody that has any trade agreement with the United States or Argentina or Interpol, period, they have to honor that warrant.
Yeah.
He can never ever in his life get pulled over by a cop. He can't get a speeding ticket. He can't get a fine. He can't park improperly. He can't jaywalk. He can't open a bank account, not in his own. And by the way, if anybody else sees him and goes, "Hey, that's that punchy face son of a bitch that stole like $100 million." Oh, there's a bounty on his head. By the way, you get paid because when they recover funds, you can get up to 10% of it for participating in snatching that dude. So everyone on earth is incentivized to snitch that little punchy face bastard.
So you would say there's motive, for example, to turn him in.
I don't see any universe where that guy makes it more than about 12 months. There's just no way. What are you going to stay in an apartment the rest of your life? You're going to do Uber Eats forever? What if the guy sees you? What if one time at 3 a.m. you go down to pick up Uber Eats and the dude goes, "Do I like my job at Uber Eats? Or would I rather have $10 million? Screw you, Uber." I mean, come on, man.
Whee!
Surgery, man. Then there's a surgeon on the hook who goes, "Do I really want to do surgeries for the rest of my life? Or $10 million. So it starts with blackmail. What happens is you do the thing for the dude, and then a couple of years later you call him, you go, "Hey, man, I know you paid me for this surgery, but you made $100 million. I feel like the $150K you gave me for the surgery wasn't sufficient. Because I think I did more for you than just change your nose.
Yeah.
I'm gonna need the same 10 million I would have gotten turning you in."
and then it's 20 million.
Well, yeah, because there's no ceiling on blackmail.
There's it, and then they can keep going back to that well, right?
Yeah, that's right. When you're blackmailable, you're naked, short, infinity.
Yep. And so yeah, it's like there's a code of ethics between blackmailers. Nope. It's like I won't turn you in if you give me 10 million bucks. I promise I won't turn you in.
Yeah, you got to clean up. So now you have to then kill the surgeon. So now, in addition to your scam, you've murdered a surgeon. And anybody that saw you go in to book the appointment, you got to go take out the secretary. Now you got to go take out any businesses that have video cameras on the way in or out of the surgery. You might end up killing 40, 50 people just to clean it up. I just don't know these days that that's possible. It's not like it's not the Dexter days. It's not the 80s. Like, that's over with. You do anything, man. You can't swim naked in the backyard of a house in the middle of the desert without some neighbor going, look what I saw on my phone camera. Like, everybody sees everything all the time.
Yeah. Yeah, things have changed a little bit, haven't they?
You don't think Zach the sleuth could go and look at where that money's going in those wallets and find out where it's going and find out where he went to a 7-Eleven or a Siete y Once in South America? Because he's not getting it on an international flight. So he's in South America somewhere, you would think.
So, yeah, I think Zach's put himself in a really good spot to make some money.
Do you think Zach is really the Lazarus group and it's the same person? He just goes back and forth.
It's hard to believe that he would be white, so good and so bad at the same time. But anything's possible. I just doubt it. I doubt it.
Yeah, he's good. Okay, we'll leave him. We think Zach is good. Zach is good.
Yeah, I think so. I think it'd be impossible.
Yeah. The sheriff is back. All right. Okay, I want to spend a little bit of time. We need to talk about something. Okay, real quick. Let's have in the comments. There's 200 people here. How many people think? Don't read the banner. How many people think tariffs are inflationary? Tariffs create inflation. Who thinks that? Maybe it does create inflation. Maybe it does. A lot of people seem to believe this. So if you believe,
I wonder what ChatGPT thinks. I'll go ask it.
Yeah.
Which model should we use? 4.5?
I'd use the reasoning model and let it think a little bit. I'd still use 01, but 5 is coming and 5 will have it all together.
Advanced reasoning. Let's see.
So let's talk about it for a second. So here's the conventional argument, okay? And again, this is what your typical dime store hack, 1960s train, black and white television, rotary phone, optimized economist and Jerome Powell and central bankers seem to think. They think that tariffs raise the cost of imported goods. Therefore, prices of imported goods go up. Therefore, inflation rises. So this is the
That's exactly what ChatGPT said too.
Yeah. So this is the traditional, conventional wisdom. Okay. This is the conventional, right? It seems logical if, again, you were trained in old book. I love the smell of old books. I will say that. I like being in the library. Books smell because they smell like education. Books smell like education you don't have, right? Like you smell it, you're like, man, I don't know this stuff. I like it. I like this good stuff that I don't. Kind of like, I guess the way alcoholics probably smell alcohol, and they're like, I love the drunk. This is going to give me. But so in isolation, this makes sense in isolation. So if a tariff rises the price of foreign steel, think about it in terms of one item, one piece of a bucket of commodities. You pick one. If you pick one and a tariff rises the price of steel, foreign steel, and nothing else changes, supply doesn't change, demand doesn't change, the global system is not going into a macro recession, nothing like that. if just one tariff against one item, foreign steel, nothing else changes, then domestic prices for a very few minutes, for a short term, they will rise. Typically, that's what you would think of as like the first move in a game of chess. Click, tariff. The knee-jerk reaction is that one item in that bucket of consumables would go up because nothing else has changed. We know we don't live in a nothing else has changed world. So you could say, okay, well then why wouldn't that be forever and all? Well, first of all, businesses typically, when there's an issue like this and they have constant demand, they don't want to destroy demand, so they'll eat a lot of the price change at first. And what they'll do is they'll say, look, we can't pass this on directly. Let's eat it right now. Let's slowly elevate the prices so we don't run clients off. So the knee-jerk reaction in investment markets might be yes, but on the street, it's barely even a yes on the street. So it's barely even inflationary on the street. So as game theory peeps that we are, looking at the strategic interdependencies between players in a game, we got to look at the incentives. We have to look at the kind of the strategic response, the second order or the next steps thinking. And let's think about substitution and macro adjustment. So tariffs reduce demand via a compression in the margin, right? So if companies can't pass on the tariff cost to consumers due to competition or, like we said, demand elasticity, they're going to eat the cost. Because again, they don't want to blow up their chain of buyers already, especially for something like steel. You can see that. So this means reduced corporate profits for the companies, not the individual. Okay. Slower hiring, lower investment. You start thinking, wait a minute, those are disinflationary forces. Hiring less people, reduced profits for the corporations, which means reduce bonuses, reduce stock options. Lower investment means they're not putting money back out and going to the steel mines or wherever the hell steel is, you get it, digging up iron. Think of it as a tax that reduces overall demand slowly, right? It's not the knee-jerk reaction is the inflation, which is like 4 seconds. And then the aggregate demand starts to reduce. So that's the tax. The tariff reduces demand across the board. Tariffs then re-anchor global pricing behavior. So because when tariffs are persistent, now in this case, when Liberation Day comes on April 2nd, these tariffs are likely to be, they're all negotiating points. And a lot of it will be negotiated, and some of them won't even on day one, they'll have been negotiated out of existence. But some will remain, and some people will persist. My guess is whatever agreements we have with countries that we're not super friends with are going to be less willing to negotiate. So those tariffs may persist. And what happens is when tariffs persist, then the countries and the companies in those spaces of the items, and again, these are blanket tariffs. So this will have more disinflation than we're just talking about one area of the supply chain right now, or one area of the consumer bucket. But if tariffs are persistent, then supply chains will begin to reorganize themselves, right? Over time, global producers will lower their prices because they want to stay competitive in these tariff-fied, isn't that kind of cool? Tariff-fied markets. So this resembles like what a price war would be at a global level, which price wars are disinflationary, right? They're not inflationary, they're disinflationary. So then you have this weird, and we're seeing this too, this strong dollar feedback loop, right? So the assumption is tariffs would shrink the trade deficit, right? Which should strengthen the domestic currency. But we're not quite seeing that because the dollar, and again, the dollar could be going in other directions for other reasons, but it's a little iffy. It's a little bit iffy, but typically the idea is behind a tariff, we enforce these tariffs, we make our goods more likely to be exported. Our dollar gets stronger. We can buy more of their stuff, and it would make up the difference. No one ever explains exactly how it makes up the difference. That's the idea. The dollar gets stronger because of the tariffs. We'll be more exporting because our dollar's stronger, their dollar's weaker, so we'll be able to buy the stuff that was going to be more expensive, but it won't be more expensive because our dollar goes further, right? And that would strengthen the dollar. This kind of feedback loop. A stronger currency makes imports cheaper. And this should, to an extent, offset any kind of initial price hikes that may have resulted from the original tariff. And this scenario is broadly disinflationary. The problem is tracking it is why the dollar might be weakening or strengthening. It's not always so clear that tariffs immediately strengthen the dollar, because it can also twist buyer behavior. So now let's look at the behavior on like the behavioral side, the game theory kind of twist to it. Once tariffs are seen as structural, meaning they're staying, not tactical, as in like pew pew. Once people think, okay, this is the way it is, producers start to delay capital expenditure, fearing future instability. So producers say, well, if this is permanent, we need to curtail our investment abroad. And let's just slow it down. Let's just dial it back. Consumers then pull back on spending because they're expecting an economic strain. The luxury car market is getting destroyed. The watch market, like luxury watches, destroyed right now. People are going, I think I'm going to chill for a minute. So any pre-tariff demand, that's pretty much run its course. Central banks become hesitant to raise rates, which is what we're seeing, because basically the whole world is lowering now. What did did the Swiss go to a quarter point yesterday? A quarter, like 25 basis points is their rate. They lowered by 25 basis points and 25 basis points. Yeah.
Yeah, that's crazy.
Because why? Because they're all anticipating obvious lower growth. So when central banks anticipate lower growth and they either start cutting or they stop any kind of raising, and again, yes, rates don't make a difference. They're a reaction function, but it's still signaling what they're thinking, right? All of it adds up to this big coordinated psychological disinflationary effect, right? So all of the things that come from tariffs, even if they're not immediate, they end up being disinflationary, not inflationary. But the conventional wisdom, tariffs, inflation. So you're putting out the wrong fire. And so when these economists start doing stupid bullshit based on the thing that happens for a third of a second and ignore what happens for the rest of eternity, that's stupid. And that's what we have. The whole world, economists, central banks, bankers, like that's the problem. None of these dudes think past the moment of the news. It's the same thing with like when you get the Fed, the Fed's about to talk. Here's the statement. Let's react. Here's the speech. Let's react. Here's the statement of the speech. Let's react to it. Here's the press talking about the speech. We should go ahead and react again. Here's the minutes, which is just the speech put into minutes. Let's react to that. Wait, what? They're not, it's all reaction function. They're putting out fires that are nuclear, and they're like with a little fire extinguisher. So it's, of course, central bank policy doesn't work because they're just clueless, and they are adrift. Brandon, did you listen to Jerome Powell's speech?
The FOMC meeting? Yeah, I listened to part of it, then shut it off. I don't like it. I don't listen to that dribble.
He's just a dithering boob. And whenever he got asked questions that I'm not going to answer that. It's political. It's political. We didn't ask a political question. We asked if you thought if it was troubling that the job growth that you're talking about is in government jobs, which are all bullshit and fake. Oh, that's a political question. What? I thought you said maximum employment, price stability. That's your dual mandate. Yeah, but this is, we don't, my ears are big. Like what? So anyway, the bottom line is Tariffs raise prices in the short term for specific goods in very near term specific situations. But almost instantly, companies, investors, and governments start to ameliorate those effects. So the broader economic and psychological effects tend to be disinflationary. Reduced demand, disinflationary. Margin compression at the company level, disinflationary. Reduced investment in CapEx, disinflationary. Reduced hiring, disinflationary. Supply chain rewiring, disinflationary. Currency strength or weakness, disinflationary. People stop spending, that's part of that aggregate demand, disinflationary. And that, which turns into eventually deflationary. You're like, well, prices got to come down. That's the cure for prices, isn't it? That's what they say. What's the cure for high prices? High prices. People stop paying. At some point, people stop paying. They're like, nope, we don't have, a never-ending supply of super, super, super rich people. It's a small percentage, and they can't do it all. So the mistake that most economists make, and then a lot of people that just parrot what they hear on CNBC without actually thinking about it, is they make linear reasoning in a world that is not linear, right? We don't live in a world where A goes to B, goes to C. It's just, that's not the way it works for us. We have a lot of information, a lot of noise, all happening in real time. And these old school on the shelf dumbasses, they forget that economic agents react, they adapt, and they hedge. That's what the entire yield curve is, hedging behavior. And this creates ripple effects that often reverse whatever initial shock might have been there for a few moments. So, no, tariffs are not inflationary. What do you think? We think we nailed it?
Makes sense to me. I mean, geez, there's a bigger market than just, that's the problem, is I think people zone in on that one item and they're like, this is causing inflation.
Well, not only the one item, but the one moment. They look at the one moment. April 2nd, tariffs. Okay, cool. Do you think that the tariffs are going to have an effect on April 2nd to the thing you were going to buy on April 2nd? Okay, no. Do you think the companies are going to absorb some of that? Well, yeah, because they don't want to lose all their buyers. So the company will do some absorbing. People will think, I don't even want to shop for those. So they stop buying. So the disinflationary effects kick in almost immediately at the perception of these things. And then the longer it goes, the worse it gets.
Yeah.
Anyway, all right. So hopefully we tackled that. Do you think we got it?
Let's see.
Yes, I know. I am not. You are not an economist. No one here should endeavor to be an economist. Like I hear, like that's the worst thing someone could call you at a party. I would rather somebody motherfucker me than call me an economist. Because I don't know what to say if they say that. I'm not sure to beat them up or not, or punch their wife. I guess punch their wife. I guess that's the only thing you can do when you get called an economist. Just punch their wife. Even if it's if it's two women, it's tricky. Punch them both. I don't know. Anyway.
Yeah. Well, okay. So you guys want some hypercycle stuff really quickly?
Ooh.
What do you guys want?
What we got?
So,
what we got?
We've been trying to work with them most of the week this week. We had a little meeting with them, and the good news is for hypercycle. Well, I got a couple of emails, so I'm going to address one of those emails kind of publicly, but I won't share the information. But there's some concerns that I guess because Tufi has not been on stream all the time, or has been like sharing information publicly all the time, that he's quit, or that you don't think that Tufi is going to make it to his end goal. I want to ease all your concerns. That is not the problem with Tufi. Tufi is working behind the scenes nonstop. I think the guy sleeps like 4 hours every 3 days or something like that. He travels around. He works on investors. He works on the project. He works on making sure ends meet. He's finding people, end users, buyers, consumers, all that stuff nonstop. Tufi is working. This is his life. He has staked his life basically on this project. he could easily go somewhere else with his brain and make a ton of money. But he knows the value of what hypercycle is going to be, and I'm not going to even throw some numbers around to where because it's pointless but like he believes that hypercycle is worth more than anything else he could be doing right now, and he believes that. Now, what we've been working on is a good thing. Hypercycle does like our idea, obviously, of going to base, and so they've been working with us behind the scenes a little bit. And so what we're working on is creating the contracts and stuff to be able to not replicate, but add to fork away from fork in addition to the node factories on Ethereum, we're going to do on base. But the ones on base are going to be a lot more powerful. They're going to have more tools, and I'm not going to explain those now, but they're going to have more tools and more utility, but they're going to be simpler to operate. It's going to be one of those, as soon as you invest in it, you're pretty much, would you say, no more clicks type of thing. It's going to be, once you get that thing,
you're going to be way more discoverable. So it's going to be a lot. You're going to be a lot brighter. Like your beacon of like, hey, I'm here to do work, I'm here to help, is going to be a lot brighter, and that beacon is going to be cast a lot further. So it's going to be much easier for your node license, your factories to be discovered to do work.
Yep. Exactly. And so what we're working on right now is they've done the contracts. Our guys at Node Market have looked through the contracts, and we don't love them. Let's just say that. So what I'm pushing for today is we're trying to let us redo just some of the lines of code in the contracts to make them even better. And so that would be a really symbiotic. I think that would be a really good end goal there. But the good news is, like, those contracts, they've already deployed them on mainnet. They've gotten audits already on them on base. But I think we're going to pull that back. And if we have any saying things, I would really like to redo some of the stuff in there so that they can just show up. We've already started building the marketplace on base and everything like that. So everybody's like, so what should we do now, right? There is going to be a snapshot date we've talked about. If you have a node, the bottom line is the Node Factory marketplace is the place on base. We're going to build that on base. That's going to be the tradable utility on base. The should I say advanced Node Factory? Anyway, so the Node Factory on base is going to be the marketplace. That's it. So you're going to buy and sell node factories on base. And so there is going to be a cutoff date to where your node factories on ETH will work in perpetuity. But if you want this advanced node factory on base, you need to have had or have a node factory built on Ethereum by the cutoff date. Past that cutoff date, you'll just have to go buy one on base at market price. But the main market is going to be on base. So that's super simple. And we'll come out with some more messaging around that here soon to explain that more fully. But for right now, if you have a bunch of licenses that don't have tokens in them, the tokens are super cheap. You could easily fill those if that's what you wanted to do. Or if you just have a bunch of tokens and no licenses, then you can decide what you want to do with that as well.
Did you just say tokenses?
Tokenses. That's some term that's been going around, and I'm like, I kind of like it, you know?
Tokenses? Wouldn't that be the
token? They're like the token stacks.
Wouldn't that be like the tokens' name? Wouldn't that go back to ownership rather than a second plurality?
Yeah. So
and if you're plural twice, aren't you straight? Like a gay person is straight.
So let me explain this to John really quickly. All right. So let's just say you're going along here and you're just chilling. Okay. There's two networks. Okay. You're chilling along here and you want to wait until you can buy a node factory on base. That's great. Boom. You wait till it's on base and you have a node factory. Okay. But let's just say you're sitting here chilling and you want to create a node factory on Ethereum. Boom. Okay. When we do that snapshot date, guess what you're going to also have? Okay. So you can wait to do the one on base, but then at day 600 from now, you'll have the one on base and none on Ethereum. But if you do one on Ethereum now and we do the snapshot, boom, in 600 days from now, guess how many node factories you'll have? So it's your call. I mean, that's pretty much the basis of it. Anyway.
That's the basis. The base.
Okay, so this is also a good question, but yeah, you'll never transfer your ETH node factory because just like I just went through here, what will you have? You'll have one on ETH and you'll have one on base. Boom,
Two.
boom. And both will work.
You have
Okay?
two.
Easy
What
peasy.
about the tilling subscription you paid for at HyperPG? Well, you're still tilling. But I don't know what they will do. I don't know that transfers over to the base nodes.
No, but just like I said, let's just go through this again. You have one on ETH that's tilled.
Yep.
And then base will start. You'll get your duplicate or get another one on ETH or on base. That's another one that won't be tilled. But the one on ETH is tilling still. So it's not like you're losing anything. It's like boom, boom.
You're just gaining. You're gaining. The only way here is that you're gaining. Do you guys understand that this is a
That's right.
gain?
Yeah. Are we going to pay again?
It's like if you have staked Ethereum and they give you Ethereum that's not staked. Your staked Ethereum is still staking. And you get more Ethereum.
Okay, so again, Denny, I'm going to do this again. So if you have one on Ethereum on the snapshot, say boom in your wallet. That means no pay again. Okay. And then, Frank almost got it. Okay, I think maybe I've made myself clear here. Yes.
Yeah.
There we go.
And anyway. I'll real quick explain for those people, mostly the early investors that were in the EDP program. Your tokens that you have locked up, you will get node licenses to match the tokens if you choose to deploy them. You can't go flip the licenses, no, but you can immediately take those tokens that were locked up. They will give you enough licenses for all those tokens to be deployed into node factories, and then you can cast them off and make that money. Make that money, yo. Which is pretty significant because some people have millions of tokens sitting in the EDP. So they would get, like, for every million tokens, you're getting basically 2 master nodes of the new master nodes, the pimp daddy ones. So that's pretty cool. Pretty cool. All right. Bam. Let's get behind the wall. I think we should.
Yes, definitely.
Yes. And we'll give you more as we get closer to all this stuff. We'll give you more information about it, but we can't tell you stuff we don't know yet. We just can't. Wouldn't be right. Wouldn't be prudent.
Going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.